Hello, welcome to My Compound Life. I am Jonathan. Good to see you. Thanks for tuning in. So this is my channel where I talk about, where in My Compound Life we talk about build assets, build habit, build freedom. Okay. So I've been building assets, different type of assets. I've been building habits to make sure that I'm consistent and I calibrate the way that I go about in building assets. So I built up a very, very good discipline, habits, and at the same time, I have my freedom now. I'm still trying to build more freedom, right? I'm still trying to retire the bloodline. So that's something that I'm always constantly working really hard for. Okay, so in this specific episode, I want to talk a little bit about how I've gone about in building wealth over these many years. So in today's video, it's kind of like a Jonathan's show where Jonathan talks about himself without shame, and essentially maybe there could be a few tips that you kind of can pick up along the way, right? So I'm in my mid-40s. I'm in my mid-40s, and I've recently started my retirement journey. I'm not exactly FIRE, where you kind of financial independence, retire early. So I retired early. I think I'm financial independence, so that's why I decided to make that move. But at the same time, I'm kind of just beginning the journey, right? So a lot of people, I think, I've read before, they think they can retire, but they cannot. So I'm still trying to figure out. But so far, I think with everything that I've invested in place, it can essentially help me to get there, right? So that's why I want to share with you. Okay, before we get started, please drop a like, hit subscribe. Oh, I think I'm on the 5th subscribers on YouTube already. It would be really helpful if you can be my 6th, right? Just do me a favor. I'm such a small content creator, no one really cares, but I know you care. I care about you guys too, right? So drop a like, hit subscribe, type in some comments. I do interact back because I do have plenty of free time. I'm also on X. So if you search me up on X for My Compound Life, essentially the same on YouTube, you find me there too. Okay, so a little bit about me, how I first started. I think recently there's been a lot of attack on Robert Kiyosaki, the author for Rich Dad Poor Dad. So that's why that kind of gave me a lot of sentiment that, none of you guys should be doing that, because every person, individual, we start our investment journey differently. Somehow so I'm not as old as Mr. Kiyosaki, right? The author of Rich Dad Poor Dad. But I kind of have, followed his footsteps when I read the book Rich Dad Poor Dad, right? So straight after uni, so by the way, my results for GCSE and A-level wasn't that impressive either. So I'm not a very, very, very clever person, but I think I am somehow financial savvy. So I'm quite street smart. I'm quite smart in a way in managing finance, discipline. That's what you guys need to, right? Be disciplined in managing finance, good at catching the trends. So that's why I'm in kind of marketing and media for my career. I think I'm articulate, but of course my communication skill can always be ramped up. So that's why I spend a considerable amount of time in sales, marketing, that kind of stuff, right? So my for me to get into university, I think one of the biggest decision I've made is to move from Birmingham, which is a small little town in the UK. They call it the second largest city in the UK, and take the plunge and move to London to study for university. I think that's a very, very important and critical things I did to get better, because I do see a lot of my friends that are still in Birmingham. They've got their opportunities robbed because they are not in the up and coming city with abundance of opportunities, etc. Right? But although many don't actually quite make it in London too, right? So I'm kind of like the blessed one. Studied in London, went to uni in London, went to Queen Mary in London, which wasn't exactly a bad university. My results wasn't that great either. I received a 2-1 from Queen Mary University. And then eventually, I started my own business, did a little bit of import, do a lot of B2B trades, where I kind of import stuff from Far East and then sell them to retailers. And you know what? It's hard to scale. I think the internet started to catch on, e-commerce started to catch on, so it was quite difficult to scale, like being a wholesaler, right? So eventually, doing a couple of years of that, I've decided, I need to get a job. I'm not exactly making a fortune living in London, right? So that's why I got, I got a job. Eventually, I went to an ad agency. Salary was pretty low because it was my starter salary, so I have to work from the bottom, right? However, I was quite digital savvy at that time because obviously my university degree was about electronic commerce. I do, when I ran my own business, I wrote my own website. I, apart from selling B2B, acting as a wholesaler, I kind of also did e-commerce, selling directly to retail, right? So from that sense, I can do search engine optimization. I used to run my own Google ads, so that at that time search ad was a pretty big thing. A lot of people found me. They go into my website and make purchase. So for a good period of time when I was in London, I made decent money working in an ad company, as well as running my side hustle business. Okay, so it's really important that you always have some sort of side hustle when you're young, right? When you have an abundance of time, you want to run side hustles and stuff like that. And during that time, obviously I took Mr. Robert Kiyosaki books to my mind, and then I started to acquire properties in London, right? So that's through my jobs, that's through my side hustle, with my wife's, at that time my girlfriend, income, we combined together, we start to buy properties. We even got into like joint ventures and bought properties together with friends and families. So that kind of helped us to gain a lot more assets over a period of time. So that was maybe less than 20 years ago, right? So we did pretty well. I think we still managed to hold on to a lot of such properties. And at the same time, all of these properties gone up in value. It gives me a lot of opportunities to grow bigger in my property portfolio, because once the property price gone up a lot more, essentially we can remortgage and take up more loans, right? So that's why I've got a nice decent property now in Birmingham, in quite a decent area, and constantly milking off my London property, because the value of it goes up tremendously in comparison to all my other property portfolios. So that's why I want to highlight that people start their journey very differently, and because at my time property was still a thing, right? Although personally I wouldn't go in and buy too much of it right now, because there's so much uncertainties with the new regulations for landlords, right? However, I might be considering buying more in outside of the UK, right? So I want to highlight is dependence on your age, dependence on what kind of assets that you get exposure to, right? You kind of latch onto it and then you do really well at it, right? And for people attacking the author of Rich Dad Poor Dad, I just felt it's not good, because he obviously did the right thing. He's trying to protect his capital. He achieved a magnificent gain from his Bitcoin investment, and then he's kind of like redistributing the gain into his ventures, right? And essentially I'm doing the same thing too, right? Every now and then, this is my third cycle for Bitcoin. Every now and then I made some money, made some good gains. Of course, I will still try to stay on in Bitcoin as much as possible, have my tap dancing shoes on, and constantly looking whether there would be any possibility of an attack on Bitcoin that would make the asset to collapse, right? And you want to make sure that you have that instinct too, right? Because yes, Bitcoin gives you that fluidity, that liquidity, right? You can be very fluid with that asset, right? But at the same time, if anything does happen to it, right, you want to shift that to something else. You want to shift that into cash. You want to shift that into anything, right? So that's why I still kind of totally believe that, yes, I love diversification. And that gives myself, my family, a peace of mind. Okay, I think that's very important, right? So this channel, My Compound Life, we talk about compounding, building asset, building habits, and building freedom, right? If I purely just talk about building Bitcoin, right? Yes, it can give me freedom, right? But it sometimes doesn't give me that freedom of peace of mind, okay? So I diversified enough that at any point of time, if Bitcoin underperform, that's fine. My stocks and shares still perform, right? Like what I'm doing right now, I'm kind of shifting a lot of my gain for the past few months already, shifting some of that. As long as I don't need that money immediately, I shift that into AI stocks, right? Because I kind of felt after this wave of Bitcoin and crypto cycle, right, very likely it's going to go all-time low. It's going to get into the crypto Bitcoin winter, and then what are the other assets that can potentially bring things up for me a little bit. So AI, something like Tesla's, Nvidia, Meta, this kind of AI stocks can potentially gives me that growth, right? And I'm constantly on growth stocks, growth investment, because it gives me the ability to shorten my period of wealth accumulation, so that I can quickly pay off more of my properties, right? And that gives me peace of mind, right? So once my cash flows is become a lot more stable, I can do a lot more things, right? Can definitely do a lot more things, and that's what I think many of you guys need to take into consideration too, right? So I obviously did not get into Bitcoin at a very, very early stage, right? I was gutted. I've heard about it, but at that time I just treat it as another. At that time I just treat it as Alipay in China, you know. So I worked in China for some time before I came back to the UK, by the way. So a bit backtrack this. So after I'd done my, you know, media advertising jobs in London, I actually moved to China. So I took the plunge. I stayed out in China for about 13 years before I came back to the UK. So that was one of the best ride ever for me, because in a very short period of time, my income grew tremendously. My income grew to a six-figure yearly income, right? So that gave me a lot of opportunity to buy more properties in the UK, right? Because I still believe properties in the UK works, right? Because it gives me cash flow, right? And at the same time, I think that the time that I kind of gone into stock investment and COVID was about 6 or 7 years ago, just before we get into COVID. And at that time, COVID period, because I cannot travel, the family cannot travel, you know, there's just a lot more cash that stacks up, right? So we kind of decided, okay, if we can't travel, we can't go and look, you know, search for properties, you know, I just put that into ETF, put that into Bitcoin. Well, I haven't got into Bitcoin yet. Put that into ETF, put that into stocks, right? So I kind of started my journey in ETF investment. I never take into consideration of any sorts of investment apart from properties, right? Because I trust Robert Kiyosaki so much that I kind of felt, maybe I just want to build wealth through properties. And it's not a wrong thing to do, right? Because at that time it was asset accumulation, and from my point, it was more properties accumulation, right? But at the same time, over more period of time, when you have more disposable income, you know, you start to diversify. And I begin my asset diversification through ETF buying, right? And at that time I was buying a lot of different ETF, right? And in the end, I kind of have to sell off all of them, because it came to my attention, just stick with one which has a good track record of giving me up to 10%, which was the S&P 500. So I bought the Vanguard VUSA in the UK. So every now and then I still buy it, right? To essentially, to get to my ISA limit, right? In the UK, we've got about £20,000 ISA limit. But at the same time, I also try to maximize that limit for my son, right? Because I think he can have about 9,000 for a junior ISA per annum, right? And personally, I kind of felt, if only I've gotten into, you know, something like VUSA or S&P 500 or ETF buying at a much earlier age, where I let it compound for a longer period of time, the return actually comes in quite good, right? So that's also the reason eventually I kind of shifted out, you know, just maximize the limit for my ISA and then move on, right? And not try to do too much on it, because there's only so much that your ETF can grow, right? 10% per annum. Some might think it's really good, right? But for me, at that time, I was trying to retire the bloodline earlier, right, with my good income from China. So I kind of thought, okay, apart from ETF, because I know that ETF is buying a basket of stocks, what kind of stocks that are performing well in the ETF that I should really buy, right? So I also kind of got into Tesla at that time. So I still hold a lot of Tesla shares now. And I think throughout the past 5 years, I've been accumulating Tesla's shares more and more, right? So I obviously look at Tesla. I think potentially it can give me a higher return in a smaller period of time. Like, your ETF for your S&P 500, you need about 10 years to 2x, right? My Tesla example, it took about 4 years, less than 4 years to 2x, right? So that's how you should be considering about what asset to help you to gain what result in a shorter period of time. So after I came to understand more about Tesla, like the kind of return, and then I kind of told myself, dude, I need a more aggressive return that I can pay off a lot more properties, or essentially, get me much further, retire in a shorter period of time. So that's when I kind of got into Bitcoin. Still, so this is my third cycle. First cycle, forget it, right? I did exceptionally bad, didn't know what's going on. Second cycle, I earned some money, right? But I never quite cashed out enough. And the third cycle, this is my third cycle, I cash out a lot more, taking profit. So that's why I'm here, to let you guys know my experience. And that's why in a lot of this video that you're watching, right, this is a real human being that had some experience with Bitcoin. So I'm not a day trader. I do monitor the price on a daily basis. I don't do, day trading. But with all of this experience, I just want to let you guys know, please, please, please remember to take profit, right? And you don't have to take profit at the high, all-time high, or, take profit and then somehow the price shoots up and then you felt really shit, you felt gutted, right? However, whomever takes profit are the winner here, right? So yes, I mean, please follow me, right? Keep following me. We can build a small community. We can talk on this a lot more. Follow my X too. We can have more dialogue through X. And yeah, I think this is just like a gist of why I'm here, why I'm on this channel, right? It's because I want all of us to to build assets, right? Because buying asset can really help us to accelerate and get much further at different life stage, right? So obviously, if you're someone much more younger, right, watching my video might not resonate because I started my journey through properties, right? Maybe you can still do properties, right? Maybe you should continue to do your properties and at the same time diversify into something like Bitcoin, which I'm highly passionate about, that you can watch a lot of my video about Bitcoin, right? But at the same time, I want all of us to build good habits, right? Because when it comes to investing, especially on Bitcoin or on your ETF or on your stocks and shares, it requires a lot of discipline, right? And I kind of have built up some of that over a period of time, and I don't want you guys to make that mistake anymore, right? I want you guys to constantly take profits. I want you guys to be more aggressive to buy when Bitcoin is at a very good price, right? And not end up panic selling whenever there are some market adjustment, like recent market adjustment, right? So I'll let you guys know transparently when I'm buying, when I'm selling, and you guys should, I'm not saying that you guys should follow, but this, I'm trying to drain out a lot of noise in the market, because I do follow social media, I do look through X, and try to pick up the right signal and do the right things, right? And if you guys are starting that journey, I think you guys might get some benefits from my channel. So drop a like, do follow me on YouTube, subscribe to me on YouTube. It's free to subscribe, by the way. It's totally free, right? Subscribe to me on X too. It's also free, right? So it's My Compound Life. I think I'm on the 5th subscriber, so please become my 6th. And that's it. That's it of what I want to chat about today. And hope you have a nice day. And Bitcoin price now is 86k. I think we might have just closed the SME gap, and we're waiting for market to open, so US market to open. So have a great day, and I'll see you soon. Bye.